everybody.
What's up?
Thanks for joining us. This is our Infinite Banking Ask Us Anything Hour, right?
Yes, sir.
This is it. And so what we are going to do is first introduce ourselves so people know who they're talking to. You are?
Jesse from North Carolina.
Okay, and I am Jonah from South Carolina. I'm one of the banking bros here at the Cash Compound. Jesse's one of our coaches here at the Cash Compound, and this hour is all about fielding your questions. It's about you. If I'm not mistaken, we are live on just a few platforms at the moment. I think that is YouTube. I think that we're live on inside of our Facebook group right now.
Perfect.
Infinite Bankers. I think we're live on our Facebook page at the moment, which is just the Cash Compound page, I think. And we're also live on TikTok.
Right.
And that's for you guys here. So the whole point and purpose of this live session is to field questions. You can legitimately ask us anything you'd like to about the infinite banking concept and about all of the financial products and intricacies that are surrounding that.
Yep.
And we're going to do our best to answer those questions in their totality with real life examples from what we've done with our infinite banking space and our policies and the people that we've helped. And of course, also with anything else that we can think of that's relevant, because we've got a little bit of experience in the infinite banking space, right?
Yeah, we're getting there.
Well, why don't you tell the people a little bit about your track record with infinite banking? How about that?
Sure. And so I even mentioned my state when I mentioned my name, because I've been on the phone today with people from these different platforms where we interact with people. So like somebody that was on our Facebook community that's called Infinite Bankers. You can find us on Facebook there. That's the name of the group. Had a phone call with a lady from there today, and the state kind of still matters to some people.
Sure.
I think that's cool, though, that we live in the world where we can connect with people, and we do work with people all across the country, but people still like to know that stuff. So you can let us know where you're from, wherever it is that you're tuning in from. So that's cool.
Proximity means a big deal. I mean, proximity.
It does.
It's not the biggest thing in the world, but I always ask about proximity. Like if you're watching and you're in South Carolina, that's kind of fun because we're in South Carolina.
You can come to the live events.
Yeah, because we've got live events and stuff we can invite you to, and you can come by the office really if you want to.
Yes.
So I think that's cool.
Yes. So that's why I threw that out there, because people bring it up sometimes, you know, it matters to them. So I saw infinite banking back in 2015, and I feel like I was on a pretty traditional, conventional track in that I was married and we were growing as a family, and me and my wife were pursuing our careers. But when I was exposed to the idea that you could be your own banker, it made me introspect and realize, okay, well, here we are with this student loan debt, credit card debt, the family car note, all that kind of stuff, you know, and I was contributing to my 401k and just being proactive in my career and all those types of things. I felt like I would have been moving all the fronts forward, but I realized that definitely when it came to finances, we were going backwards.
Yeah.
And we were doing all the conventional things. So I found, you know, this concept to be, you know, the lifestyle that we wanted to have control and profitability over the banking in our lives. So we started using our system to pay off that debt. That's my starting point.
I like it. I like it. Jesse, we've got over 200 people here live on our TikTok here. So I think we should tell them again what this is all about. This session is for you to ask us any and all questions that you'd like to know about the infinite banking concept. I will let you know that I normally say there's no stupid questions, but there's been a few times where we've gotten some questions.
He's judging y'all.
That are real interesting from the TikTok community out here. So I'm going to let you guys start typing them in, all right? Or using the, I guess you got to do it like this if you're on your phone. But we're looking for any and all questions about infinite banking and about the other financial products that meet infinite banking, right? A lot of people, when they think about infinite banking, they're going to ask something about retirement. That's a big deal to a lot of people.
Yes.
A lot of people save and invest for retirement. And so that's a big question mark for everybody. Infinite banking kind of relieves that question mark. And so what happens is we get a lot of questions about that, right? We do have a question right off the back from the movement. What is up? And he is saying, what company do you use? Is the actual question. I think he's going to be...
See there, I told you he was judging you.
I'm not judging. I just read...
You read it like it was...
I read exactly the words that are there. What company do you use is what it says, but I think he's saying, what company do we use? So we can ask.
Yeah, we use the Cash Compound. That's who we use.
No,
I say that kind of joking, but also because again today we lead so strongly with education by doing stuff like this. Ask Me Anything.
Yep.
That sometimes people get on the phone and say, "Well, hey, are you going to connect me
Yep.
with somebody
Yep.
who's actually going to connect me to the insurance companies
That
that
does
do
happen.
this?" Right, because we're so strong on the which I like. But at the end of the day, we also want to tell people it's like, well, we're the agents.
Yep.
We're the ones that are going to personally work with you and help you get these policies from the right companies built the right way so that you can use them for infinite banking, et cetera.
That's right. He did correct it. I saw it. I saw it in the comments. I appreciate you.
Awesome.
He's just asking what company we use. We knew that. That. I was just giving you a hard time.
Having fun.
We use a couple different insurance companies to facilitate the infinite banking process is what we do. We are not tied to one specific company. That can get you in a lot of, it's not trouble, that's the wrong word, but your information can be very directed if you're only tied to one company. Here's what I mean. If you call State Farm, they're not going to give you any information about Allstate or Geico or Progressive. It's not happening. They know State Farm. Even if they knew the other products, the other companies, they probably still wouldn't tell you. Because how does that help them if you called and then you went over and got the other company, right? So we use a couple different, 3 or 4 or 5 different companies we use for the infinite banking concept. If you jump on our calendar, our social calendar, you want to get a call with us, we'll walk you through which one we think might work best for you and your situation, but it's all custom and complementary. So there's not like one size fits all, and I can just jump out and tell you because you want to do it.
But there is a type. There's a right type of company, right? A right type of product. And that was another question already on our TikTok.
Yep.
I don't know if Will's going to let us know when we see questions on the other platforms or not. But that other question was about whole life. Yes. So it is going to be whole life insurance. And it is going to be with this type of company that is a mutual life insurance company. And there are several companies that fit those metrics of, okay, they offer whole life insurance. They are a mutual company, which is what allows us to be part owners of that company, which then allows us to earn dividends when that company is profitable. And all the companies that we use have been profitable for at least 100 consecutive years. Big chunk of history.
That's a big chunk of history.
Lots of things have happened in that time frame.
Yep.
So that's the type of company that we're looking for.
I love it. Let's go get some more questions. Liam, I see you in here on the live. Give us a question, man.
What's up, Liam?
Appreciate you liking the live, sir. Okay, we're gonna back up to, I think I saw Leah. Yeah, I'm gonna mess up your last name, so I'm just gonna avoid it. But it's Leah says, "What do you suggest for a retirement fund?" That's a really good question. We can answer that one.
Yeah, I like that. And we're getting volume a little low on YouTube. Will, just tell me if you want me to dial that up on our end or if that's something. Yeah, we'll adjust.
I think we got it. Okay, so let me talk about retirement real quick for Leah. So I've got a bone to pick with retirement, if you will, for just a moment. Here's why, and then I'll answer your question. I will. But here's my bone to pick. A lot of people, when they talk about retirement, if you went down the street and you asked somebody, Jesse, how do you save for retirement? What's the average answers? And then I'm not just calling out one, but I'm saying, what are they going to say? Hey, are you saving for retirement? They're going to say, yeah, I am. I do blank.
Yeah,
what are they going to say?
They're going to say, I invest or save in my 401k at work.
I agree.
And maybe there's this match.
I agree. They're going to say IRA. They're going to say 401k. If they're a teacher, they're going to say 403b or something like that, right? That's how everybody does it. Okay, so here's my bone to pick, Leah. Those vehicles, which everybody mentions, those are not savings vehicles. Those are investment vehicles. Here's what I mean. Hold on a second. Stay with me. Can you lose money in your savings account? Can your savings account balance drop backward?
No.
No. Can you lose money in your 401k? Can your 401k drop backward? Can your IRA go backward? Right.
Yes, I did.
Yes. Therefore, that is not saving, that is investing. So your question was, what do you recommend for retirement? What do you recommend for saving for retirement? I love your question. And here's kind of the number one answer for me. I don't recommend a investment vehicle for retirement. I actually recommend a savings vehicle for retirement. I think that if you invest for retirement, you've got the ability to lose the money. I'm pretty positive that's what investment implies, risk.
Mm-hmm,
that's what that thing is. That's what it means. So my suggestion for you is actually just don't use an investment vehicle for retirement. Use an actual savings vehicle. We believe that we found the most ideal asset for savings that exists in the world today, right?
Yes, sir.
There's a few attributes that are involved in this particular asset that we love, that you can find some of these assets, some of these attributes on different vehicles, but you're never going to find all of them in one spot.
Yeah.
Right?
Yeah.
And so we think that we found the most ideal asset that has all the attributes that you actually want to see in a savings vehicle, actually inside of one vehicle. And so that's our suggestion. It's use that one then. It has all the features that you actually want. The best feature of your investment is that it has the ability to grow. That's the best feature. Well, we've got the ability to grow in our savings vehicle also. The best feature of your conventional bank account is accessibility.
Yeah, that liquidity.
Liquidity, accessibility. Well, we've got that also, right? I mean, you can keep going, but we just think we found the ideal asset. And so that's where we recommend. We recommend whole life insurance through the infinite banking concept to be your ideal asset for where you should do things from, especially your retirement. A lot of people just invest for it, and they wondering why they're not getting there and it didn't work out and all this and that and the other. And it's like, well, it was an investment. They never promised you that you'd make it. So, yep.
Here's what's overlooked if we get too tunnel focused on retirement is that we overlook the problem that the average American right now today is bleeding out about a third of our income in interest.
Yeah.
So I would say the best step that I would ask people to consider to prepare well for retirement is just to keep more of your money now. What if you could keep a third more of what you've typically been keeping? Is that not going to better position you come retirement age of life or passive income time of life? Absolutely. Yeah. And then when you realize that you can compound that from today moving forward, keeping that money and compounding it while still having the access and the liquidity, everything else that Jonah was saying, you're checking all the boxes.
Yeah, I love that. Okay, Juanita on YouTube's got a comment for you, Jesse.
She
says, my policy's been in effect for several months, and I already have used my available funds. It was super easy. Money was transferred into my checking account. TY, thank you.
Juanita Vasquez.
There you go.
I appreciate that comment. Yes, it's a real simple way of life. When you figure out that with infinite banking, you can add that one step of, okay, build a private banking entity and then finance the things that I'm going to do in life from there. It's so simple.
Yep.
It's a stress-free type of lifestyle when it comes to your finances because you're the one in control.
There you go.
And you're the one profiting.
There you go. Juanita, congratulations.
Yeah.
Great job. Let us know if we can be helpful to you as you continue to move forward. Keep using that policy. I'm so thankful for you. Thanks for joining us. Thanks for your comment. That's awesome. Okay, what about Zircon?
Yeah, you want me to read it for you?
Go ahead.
That's a good question.
Yep.
Is it better to open 2 policies at $2,000 per month or one at $4,000?
Oh, I like that question.
Yeah, take it.
I like that. Okay, so I'll give there's a different perspective. There's a couple different ways we can answer. So I'll give my perspective.
Yeah,
maybe
I
you'll
might
have
weigh in.
Maybe
Sure.
you'll have a different one.
Sure.
Okay, so thanks, Juanita. Zircon. So here's what I would say. When you're talking about compound interest, when you're talking about earning on the dollars that you put in, 2 policies at $2,000 a month is the same figure as 1 policy at $4,000, right?
Math
it's
is
the same, math is math. It's the same number. However, 2 policies, in my opinion, give you the ability, not in my opinion, this is real, but 2 policies give you the ability to insure 2 people.
Yeah.
Okay. So here's what I mean by that. We are going to use whole life insurance for the infinite banking concept, but at the core of this process is a whole life insurance policy. So if I'm married, which I am, and I have the ability to now get whole life insurance on myself and my spouse, myself and my daughter, myself and my son, myself and my mom, myself and my dad, just whatever two that might be for you, right?
Yep.
Then I'm probably choosing 2, because that means that whenever either person passes away, there's an influx, big chunk of change, death benefit, big deposit that's coming to the family. This is the idea behind like the very famous book that you've probably heard of, What Would the Rockefellers Do?
Everybody, you get a policy.
Yeah.
You get a
There you go. It's like the Oprah, it's like her favorite things episode, right? That's like my favorite thing. Everybody gets a policy. I love that. But the reason that they do that is because it does not matter who goes. It doesn't matter who goes. It doesn't matter when they go. The family gets richer. The family gets richer. And so because of that, I'm all for Zircon. My 2 cents to you is we're going for 2 policies, man. Because I want whenever anybody goes, your family gets richer.
Absolutely.
Right?
Yeah, had
So
a
that's
good
my 2
conversation. Yeah, no, that's it. I had a good conversation this morning with somebody who actually was from North Carolina, and we were connecting on that point. And that's what we were talking about is, okay, she's at that fun part of life where she's got grandparents still and has grandchildren.
Okay.
So we're talking about, strategy of up the chain, down the chain, broadening out to siblings and nieces and nephews. And yeah, anytime that you could protect more people and check that box while still compounding the same amount of cash flow that makes sense for you into this private system, you're checking both boxes at the same time.
That's right. That's right. Coming in.
I love hearing the success stories like Juanita's.
Yeah, it's real fun. 3 platforms, I think. We've got our Facebook group. So if you're in our Facebook group, leave us a comment. Give us a thumbs up, something. We'll come back for those questions.
Let's ask this for the Facebook group while I think about it. Okay, because on another conversation, I got the feeling that somebody was a little overwhelmed with maybe some of the vernacular in the Facebook group. Y'all, don't hesitate. And this was somebody who did take the step of getting on my calendar, so that's good. That way we can address in common language, your questions and things. But don't hesitate to put out a question or a thought or to ask for clarification. I mean, that's what the group's for, to speed up everybody's learning curve, to be able to share best practices across the board. We're really trying to facilitate, a lot of progress in that community, and it's going to be better when you participate. So if you have a question, put it out there.
There you go.
You will get some help.
There you go. All right, I got a lot of people jumping in and out of the TikTok. Libby just jumped in. What's up, Libby? I see a Brian in there, a Carnell. So here's the deal, TikTok family out here. This is an Ask Us Anything when it comes to the infinite banking concept or your financial lifestyle, things that connect to that. If you've got questions that you want to know the answers to, we've got some life experience, almost 10 years of infinite banking experience for us to be able to share with you. So we want to do that. You just got to type out your questions. Once you type them out, we'll jump to them if we see them, and we'll make sure we get them answered for you. And that way we can make sure that you're learning and you're educating and you're bettering yourself when it comes to that financial space.
Yeah, if you're interested, in a sentence we say you can save and spend your money at the same time. So if you're interested in that idea that you could save and spend money at the same time, that's what we're here for.
Yeah, it's interesting to me, even when I still hear it. I know how to do it, and it's fun. I'll tell you a question that I got yesterday.
Let's hear it.
Maybe this will be helpful for the group as we get them to start typing in some questions here. Yesterday, someone asked me about credit cards, and they said, listen, I'm reading on the internet, I'm seeing in articles, all my friends, that sort of thing, everybody's getting the credit cards because everybody wants to do the points or the miles. And, what's your perspective on this? Should I do it? Should I not do it? Help me understand what to do with the credit cards here, right? And so I gave my 2 cents on it, and I thought that was a really good question, especially when it relates to infinite banking, right? So here's my answer for all those who are paying attention. My perspective on that was I love miles or points. Sure. I really do. I like to travel. My family likes to travel. So if I can travel, grab a free flight with some miles, I am all about it. But what I do not love is giving in a bank, a third party, a credit card company, $1 of additional money, extra interest, charge it, whatever you want to call it.
Yep.
That's what I don't love, and I am not here for it, right? So it takes a little bit of financial discipline, meaning you got to figure out when they're going to charge you, what day of the month it happens, when it comes out, that sort of thing. But my 2 cents on it is you can absolutely use a credit card in conjunction with infinite banking. Put your transactions on the card, get your points, get your miles, get them up. Take a loan from your IBC policy to eliminate the credit card balance before, this is important, this is the key here, before they charge you.
Yep.
Because that's the whole point of getting rid of I don't want to have to do business with them. They charge you money every time you do business with them. So,
and then it's gone forever.
And then it's gone
if you're paying them that extra. Yeah. When you could keep it yourself. Yeah, there's a game to be played. There's no doubt about it.
Yep.
So when you address the human problems like Nash would cover in his Becoming Your Own Banker book. If y'all have not read the book, that'd be my strongest suggestion is read the book that you hear us talking about called Becoming Your Own Banker by R. Nelson Nash. He addresses the human problems first. There's no question that there's a game to be played. You just don't want those levers pulled against you. You want to be the one pulling the levers on saving your money, spending your money, earning the points along the way, the miles along the way, all while still keeping the money.
There you go.
Instead of it going to somebody else.
Okay, Testa asked a really good question. We got to address this one. Then we're coming to Sean up here on YouTube. But Testa asked on TikTok here, how do I start infinite banking?
Oh, well, the first thing is education. So right up here at our link, you'll be able to find our introductory presentation video on the nuts and bolts of this whole concept, right?
That's right.
And then there you'll also have access to our calendars where you could jump in and talk with us about your questions, your plans, your goals, your aspirations, how this is going to look for you to implement it. So our first suggestion is going to be education on the subject, right? Now, if you've already seen that, put a question down in the comment section so that we could address that. But that's the starting point, is watching our introductory presentation video.
That's right. Then after that, whether you click the video link, whether you see that straight in the bio up here by clicking that, the next thing that you do is just schedule a call with us. What we want to do is walk and talk you through your personal situation. Everybody's situation is different, right? Jesse mentioned at the start of the top of the hour, right, that you were doing all the traditional things when you saw infinite banking for the very first time.
Yep.
When I saw infinite banking for the very first time, I was doing a lot of the traditional things, but not all of them just yet because of my age. I was a little bit younger. So I didn't have.
You're so mature. You're so
well, you know, that just, I don't know. That comes with territory. But anyway, I didn't have I never started an IRA. I hadn't done that yet.
Right.
It was on my list to do. I had not done it yet. So when I discovered infinite banking, I went, oh, well, if I'm weighing options, well, this one takes the cake by far. I'm not ever going to do this one now, right? And a lot of people have already started those things. And so we want to talk to you about your specific financial situation because it's different from the next person's.
Yeah, the cash flow inefficiencies, how you could optimize things. Yeah.
Absolutely. Okay, we got a new question up here. Why don't you read that one?
Yeah, so we're getting a request to please touch on how the insurance company generates revenue, how they're able to guarantee growth to the policyholders. And then we got a comment, thanks, love what you guys are doing, 100% appreciate you.
Yeah.
I was actually just listening to something about this, and Nelson also covers that in the book, that there are really just a handful of ways that insurance companies are doing business and creating revenue. So there are a few different directions that maybe that we could go. One of them was, I'll tell you the one that I was listening to this morning. In a very well-known city, there was a guy that had walked by a development that was being developed. And right there at the bottom of that beautiful sign by the gate with the guardhouse and all that kind of stuff, right there at the bottom, it said, financed by
the insurance company.
And then there's a well-known insurance company, right? So they're getting access to deals when it comes to real estate, for one example, that we're just not going to be invited to the table on. You know?
Big development projects, right?
Yeah.
Those big developers aren't asking the average everyday person for that money. They're going to the big guys,
the people that have it,
and the institutions, and that's normally the insurance companies. So that's one way. There's other ways that insurance companies make money. You have to remember that insurance companies sell a plethora of products. Right? Everybody knows about some of the most famous insurance companies out there. This is not a secret. You know full well that there's State Farm and there's Progressive and there's Allstate and there's New York Life. I mean, these names are brand names. These are household names. You're not confusing anybody when you mention these companies. But if you go to their websites, you'll see at the top bar, like the entire top line is going to be like all the products that they sell. Right? And there's a lot of them. I mean, you know, you might have State Farm might have 12 different things that it sells.
For sure.
Right? One of them could be whole life insurance, right? I think State Farm actually does have whole life insurance, but they also sell term insurance. They also sell car insurance. That's what they're most famous for. There's a very popular life insurance company that actually their biggest thing on their books, the biggest thing they sell is actually dental insurance.
How about that?
right?
Yeah, yeah.
But you wouldn't know that because it's like, oh, they only do group dental insurance for like organizations. So you probably wouldn't even know it sitting at your house. But if you work for GE
got
or
it from
Walmart,
work.
you knew that because that's who has your dental. You know what I mean? So these companies sell all sorts of things. They also do lots of investments. They do lots of corporate bonds and mortgage-backed securities and government bonds and all sorts of stuff.
Because they get to come to the table with their long track record
Humongous
behind
long track
them,
record, right?
and then of course they're gonna be here when we're gone,
Right.
So they get to look way out into the future too.
Yep.
And assess things that way.
Yeah, and these insurance companies have been around for such a long time. I mean, forever, 100 years, 150 years. And so they've got this humongously big book of business. They have all this money. They have this huge track record. They get access to some of the best deals out there. They invest their money super, super wisely. There's not very many insurance companies that have ever gone out of business, and there is no mutually owned insurance company that has ever gone out of business in the history of the United States of America, which is why we put our money in the insurance policies. You know, it's funny to me. I always get people that ask, like, what about, when I put my money in banks, the banks are insured with the FDIC. And I say, hold on, pause. What'd you just say? The banks are what? Well, no, I don't know. It's insured. The money's protected with the FDIC. And I say, well, what does the FDIC stand for?
Right.
Right. And what is the I in FDIC?
Right.
Insurance. Right. It's the insurance companies they've been around so long. They're the ones who have all the money. Right. And that's where we put our money. We put it in the insurance companies. So,
yeah. It's a good question, that one.
It's a good
that
question.
one right there. And when you realize that you could be part owner of such a company that has this kind of a track record and that has this kind of ability with capital on hand to optimize on these kinds of opportunities, and you could be a part owner of that and enjoy the guaranteed growth plus the opportunity to earn dividends.
Yep.
Like, where do you want to build your money up, right?
That's exactly it. Okay, Zircon, what's the fastest way to build up cash when opening a new policy? Is there a limit on deposits?
Okay, two-part question. All right, so the first part, fastest way to build up capital in a policy is how it's built, is what matters. How it's built. Because if you go to the box store and talk to the box store agent and say, hey, I want, you could say whatever you're going to say, life insurance, whole life insurance. You could say what they're going to sell you a product. But if that person behind the counter, if that person on the other side of the phone is not practicing infinite banking, they can't help you because they're not even personally doing it in their own lives. Right? So we're practicing what we preach here. We help people professionally with what we do in our own personal lives. So we're going to be building, because again, we're the agents, we're the professionals that would actually be working with you. We're not just the educators.
Yep.
You would be our point of contact. We're your point of contact. We're going to build a policy right out of the gate to have a significant amount of cash value, Zircon, that you could immediately begin using for banking.
That's exactly right. So if you've got the right style of policy, Zircon, you're going to have the ability to add more dollars into that policy that is going to immediately contribute to how much cash you can pull out. Immediately contribute. Your second part of the question, is there a limit on deposits? There is, but anytime that we design a policy with the intent in mind for infinite banking, we're going to make sure that you've got a big limit. So that way you can keep adding money if you have it or if you come into it, because we know that you're trying to build up the cash value. So then you can take the cash value as a loan. You can go use that money to do all the cool deals, right, that now arise because you have money, right? Opportunity strikes those who are ready for opportunity. If you have no money, opportunity can knock. What are you going to do about it, right? What are you going to do? You have no money. But if opportunity knocks and you've got the resources, you've got the money, now we can take action.
Yeah,
right?
The golden rule.
So I love that. Okay, I'm going to mess it up. Chicks Coco is liking our live like crazy. Thank you. We
Appreciate
see you. But she said she was in Canada.
Oh, neat.
We can still help in Canada. Well, now we can't help in Canada, but we've got some friends up in Canada who can absolutely help you. So if you need to be connected with our friends up in Canada, what does Jeremiah always say? What is Jay? He always says something about. He's always says something about.
Uncle Joe or Justin Trudeau.
Down here is Uncle Joe, but up there is Justin Trudeau. let us know, and we can connect you with someone who can work in Canada to get that policy started for you if you need to. So to Cheeks Coco, send us a DM if you would. And then as soon as you do that, we'll respond back after this live, and I'll shoot you the link, and you can go over to our friends over in Canada and get started with your infinite banking policy. And that way you can still do exactly what we're talking about, but you can do it in Canada. It just works just a tad differently up there in Canada. So we just need to connect you with those people who know.
Slight difference on the products and things.
Yep. All right. Right. Opportunities will arise, said Mr. Nash. Looking forward to those invites. Insert evil laugh.
Nice.
Thanks.
Have you been well?
I haven't been practicing.
You have been.
I have not been practicing, but I agree.
It just came out natural then.
Yeah. But I agree. It's all about having the opportunity. So you're gonna love this. I've actually done this once or twice. I need to institute it a little more.
Okay.
I've been in a presentation before where someone's talking about how you have to have capital in order to capitalize on the opportunities. And they do this example where they hold up $100 bill and they say, first person to bring me a 1 can swap me for it. And then everyone starts,
they
immediately, and they're running up there to try to swap for the 100, and it's to prove the point. He's like, told you, it's capital. You have to have money for the opportunities. If you don't have capital, you cannot take advantage of them. And I've been in a presentation where that happened, and I was like, wow, that's good.
I like it.
That's good. And I didn't win the 100, and I was even ready for it the next day and still didn't win. I got beat.
Oh, man.
Did it twice, 2 days in a row. People. Yeah. And I was ready and still didn't get it. I didn't run fast enough.
That one would stick with me. That's good. And I think it points to people's resourcefulness too. Like when they see an opportunity, they want to move in that direction. But if you're already positioned,
but it's capital, right? It's access to capital, and that's what we teach here about what infinite banking is. That's why we were saying, ask us whatever you want to ask about infinite banking, because we think that access to capital, having your money in the right place where it continues to grow, but you still have access to capital, is that important. Because you cannot do these opportunities, you cannot have growth, you cannot get ahead if you don't have access to capital.
Yeah.
And if you use all of your capital to do all of those things, then your capital is now gone. You did one thing, and then it's gone.
So let's talk then about some of the ways that we're separated from our capital that inhibit our control and profitability over it then. So I'll speak again from that employee perspective, right? So when I had a teaching job, there was going to be a certain percentage of my paycheck that I never saw. That was going to be pulled right out up front.
And put into
into a state retirement.
State retirement. So, did it have a fun name with some numbers and letters?
No, not that one.
Okay.
That it was just that percentage, a significant percentage just pulled out. I never saw it. And then, of course, you have the person that's brought to the front of the room once a year who gets up there and is talking about the 401ks and the 403bs and all these other things.
Yep.
And then those are more voluntary. I say more voluntary because now, back then you used to have to opt into those plans. Now you're just automatically opted in. You got to opt out.
Yeah.
Yeah.
They opt you in these days. Yep.
But then I was actively contributing to a 401k on top of it. So just right out of the gate, right when people need the money the most, I feel like, right when they're starting a family, right when they're starting a career, right when they're just beginning to get the car notes and the mortgages and all that stuff. And then there's this other layer where we're either voluntarily or involuntarily putting money aside to somebody else for the next 30 or 40 years.
Yep.
It's preposterous. Looking at it now, it's just preposterous that we would lock that up for 30, 40 years. Blows my mind.
Crazy. Okay, we got a couple other questions. Let's jump in real quick and make sure we answer them. We got a question here on TikTok. We got 2 or 3 on TikTok here now.
Let's go.
So let's talk about and again, I'm sorry. I know I'm mispronouncing it, but Tatix Coco is asking specifically. Let me scroll back up. I'm confused. Are you guys a company or teaching us about capital?
Both.
And then she says, or as in a capital company. Sorry, I came in, you were talking about insurance, but I missed a bit. That's no problem. We can recap. And then we're going to come to you, Jeff. We're going to answer your question next. And then we got J10 up here with a question. Why don't we talk about Tatix Coco question here first? Who are we? What are we doing?
Yeah, so we are the Cash Compound. We teach people how to save and spend their money at the same time. So that leads us to talking about capital, control, profitability, banking, all kinds of things that you should get familiar with in a free introductory presentation video. Links in our bios to our calendars as well, where you could have a one-on-one consultation call with us about what that could look like for you to implement this concept. But yeah, all things money. All things money is what we're talking about.
All things
here.
money. Specifically, we love the infinite banking concept, which is a process on how you can use whole life insurance of all things. It's the craziest thing, but you can use whole life insurance in order to do all these really cool things with it. And that's what we like to do. We have determined, after reading a few books, using a couple policies ourselves, that the whole life insurance policy designed specifically for infinite banking actually has all the attributes that you could possibly name in a conventional account that you actually want.
Liquidity, access, guarantees, control, privacy, just on and on and on.
Yeah, it's got all of them. Like all your best. I like my 401k because it has the potential to grow. That's in whole life insurance too. I like my savings account because I can go access the money quickly. That's in whole life insurance too. I like this because it's private. That's in whole life insurance. Like it's all there, actually. So that's what we love to use. Jeff says, what happens to your policy, your whole life insurance policy, when loans are taken out and then you don't pay them back, or you only pay the interest back? It's a good question, Jeff.
Well, right out of the gate, my first thought is, well, what a nice position to be in as the owner of such an entity that you're the one that gets to decide, number one. Like, think about collateral. You know, if we don't pay a car note, the car could be taken away. We don't pay for the mortgage, the home could be taken away. But if we decide...
That repo, they call that foreclosure.
Right? Yeah. But if we decide, and we should do this strategically, so I'm not saying don't be disciplined, don't be paying attention to things. But if we decide strategically for a time not to pay back a policy loan or to hold off on policy loan interest or just any of that, what's the collateral? It's the death benefit.
Yep.
That's it.
That's it.
Nothing to be pulled out from under us, right? We control that repayment. So I really like the control. But if you want to talk about some of the other aspects, Jonah, go ahead about.
Yeah.
Because we would encourage people like policy loan interest.
It's a great question. You are allowed inside your infinite banking policy to take a loan, go use that loan money to go buy something, and then decide not to repay it.
And he does say he completely understands that you should.
Yeah, which is awesome. I love that you understand that you should.
Yeah.
But you're allowed not to. So what that really means to me deep down in my heart is that if life gets crazy, I'm married, I've got 3 little kids. Life can get crazy, right? It it could be crazy right now, right? My 6-year-old could literally have broken his arm at school.
So we're praying for the moms
today, right? Like an hour ago, mom could be on her way to get him, could be at the hospital. I got to go pick some. Like life can get crazy immediately.
Yeah.
Right. And if that happens, and my cash is tied up all of a sudden, maybe I get a really big doctor bill. Maybe the car is hit. My car was hit twice in the last month. Right? Maybe I've got
talk about it.
Yeah, let's not talk. But if life gets really, really, really crazy, I'm in charge, so I don't have to make the repayment if it just doesn't. Like it shouldn't happen right now. Like I need the money. I gotta do all this other stuff. I'm in control. So control is a huge. That's one of those attributes we were talking about. Control. So Jeff, you're good, man. You don't have to do that.
We were asked where we are. So today in studio, our office is in Greenville, South Carolina.
Greenville, South Carolina.
We're getting a follow-up question from.
But my heart
Takis
is in L.A.
Coco. Oh, okay.
If you will, is it this way? Can you get? My heart is in L.A. That's.
I guess so.
I love L.A. My family is from there, but we're in South Carolina.
Okay.
Did I do it right?
But I mean, we're doing work all across the country.
Yeah.
So.
But we can help you anywhere you are in the United States and in Canada. We just got to send you to our friends over there in Canada because we can't actually do it. J10 says, what if you're currently using your monthly cash flow to pay down debt, VB? I think that stands for velocity banking.
Yeah.
Should I use the HELOC to start IBC, which is infinite banking?
That is
right. The infinite banking concept.
That is a robust question. We could go for a long time on that one. Again, I'm going to say that's where our one-on-one consultation calls are so important. So we can get into the details and the nuances, but it's an open season right now on that kind of stuff, so we can still talk through it.
So J10, I'll even tell you this. We do have a couple examples of folks using HELOCs to start IBC. I absolutely understand what velocity banking is. For all of those who don't know, what that probably means, J10, you can correct me if I get it wrong, but that probably means you've got a first lien HELOC. You use all of your monthly income to go into that first lien to pay down that, what we call the mortgage. Then you're taking your equity from the first lien. You're using that to pay all the bills. So that way you can drop your mortgage down and down and down and down. I love that. We're actually real good friends with a gentleman on YouTube. His name is Denzel Rodriguez, who talks all about velocity banking all the time. That's awesome. You absolutely can use velocity banking in conjunction with the infinite banking concept. I know they both have the banking term in there. So that can be a little confusing, but absolutely you can do that. We've got examples where you can absolutely walk through that. That is legitimately why we say things like, jump in our calendar, talk to us about your situation, so we can then show you the examples or tell you exactly how you can actually accomplish what you want to do, and show you on paper how you can go faster, how you can go bigger, how you can do more things by incorporating both. And so that's really cool. Yes, also consolidated our debt. I love that. I've also heard, so I did not particularly practice velocity banking. I didn't realize what that was when I first bought my house and things like that. I've recently been even more because we've got even a rental property currently that, like, you know what, I think I might want to try velocity banking on this now that I'm in position to do it. But I've heard some really cool stories about people who are paying off their houses in 3-4 years, paying off all the debt by doing the velocity banking approach.
Sure.
And I love that, because I would never send all that money to my mortgage note or to the other debt, because you just lose the money, right? I'm not going to work hard and earn an extra 10 or 20 grand and then just give it to the mortgage people. I'm not going to do it.
Yeah.
Because it's gone. I used to think, well, that's perfect because I want to get out of debt, so I will do it. But now I'm like, no, I'm not going to do that. That's just giving them the money. But if I can put it on the debt, and the money that I put on the debt turns into equity, well, now we're talking something different. Right.
Yeah, I also found infinite banking before I heard about velocity banking. So that's where we proactively build our capitals in our private banking system. And then, you can get all kinds of creative with equity and capital that you have access to in other places, and incorporate multiple strategies for sure.
Yep.
But the foundation for me is that private banking system of policies. Get money first. That's where the capital goes first.
There we go. We got a hello from Bakersfield, California. Hello. And hello from Greenville, South Carolina, where we are.
Awesome.
I've been to Bakersfield lots of times, though. 661 Daisy Days. Lots of times. I got a lot of family still actually in Bakersfield. So I appreciate you jumping in from Bakersfield. 3 hour now. Daylight. I was thinking daylight savings. You guys are 3 hours behind it. We are like the noon hour here, noon to 1. I'm assuming 3 hours. You guys do daylight. What are the states that don't do daylight savings? There's a few.
I don't know.
You know? I don't remember.
Okay,
Jeff was saying, how does it affect growth, though? How does it affect growth? His question specifically was, if you remember, what if I pull the money but I don't repay anything? And he's asking, how does that affect growth?
Yeah, so what's possible here with infinite banking is to be able to earn uninterrupted compound growth by paying premiums, over here. And then you still maintain access to the company's pool of capital, right, from their general fund, and we can take policy loans relative to the cash value that we've built up in our policy, so that we get to have both of those at the same time. So we keep the uninterrupted compounding on the capital that we've paid into the policy that we've started, right, while still having policy loans. So both those things are happening at the same time. We're still earning, the guaranteed growth. We're still eligible to earn dividends from the company, all of that, while still even having outstanding policy loans.
Yeah, I love it. Short answer is doesn't affect your growth. Still going to grow. Guaranteed. Guaranteed. J10 says, okay, I'll set up a call. Thank you. I'd love to chat with you, man. I'm not sure if borrowing at 9% to start IBC, that must be the HELOC rate. I totally get that. That's a conventional banking product, so it's more than likely Prime Plus or however they're going to do that over there at his bank, right?
Yep.
So I guess it's 9% about right now. They can adjust and change that. Generally, when it's Prime Plus, which is normally how HELOCs are set up, that just means if Prime changes, your rate changes.
Yes.
Right? Okay. But it's 9 currently. I totally get it. I guess I would need to find where to use the policy loan funds in order for it to make sense. Well, in the example that I'll probably show you, Jay, if we get on the phone together, is that we're going to use the policy loan funds to repay the HELOC. So that way you can start your IBC policy, but you don't have to carry the big HELOC balance. So that's probably what we'll do. If you want to do something different, that's cool too. That's the point of jumping together and talking through it. But yeah, we got you, man. We can show you those examples. We can walk you through it. We can answer your questions. If you schedule that call, that would be perfect because then we can actually do it, get it done over the phone, get it done with the video chat, however you like to communicate is how we'll get it done for you so we can be helpful to you. So
yeah, these folks like J10 that are savvy and paying attention to things and looking to be creative, they love working with us, and that's obvious why. I still like putting out, prefacing ideas to folks because you're going to be your own banker. We're encouraging you to be your own banker. We're not going to tell you what to do, but we're here to help speed up your learning curve, quicker, sooner, better, faster, all those things for sure, share best practices, etc. We've got a lot of resources that you should check out. But at the same time, it is as simple as doing the things that you're normally doing, right? Paying property taxes, vacations, a lot of the shuns, medications, educations, vacations, right? Those things that we're doing anyway in the background, you could just be doing infinite banking on the normal stuff. Nash talks in the book about like appliances, cars. Cars is a real practical example, right? Like you could just be earning what banks are earning on that stuff too.
Yep.
But go as deep in the waters as you want, right? With the creativity and the equity and all these things.
That's absolutely right. What's up, Joseph? Thanks for joining us. Bobby, what is up? Dave, how are you? This is our Infinite Banking Ask Us Anything Hour. If you've ever heard of Infinite Banking, ask a question. If you don't know what Infinite Banking is, ask a question. Walcott, I appreciate your liking. Kwame, what's up? But if you think you want to know something about finances, ask a question. Financing, ask a question. Anything like that. We will absolutely see it, read it, and walk you through using our experience, using our 10 years plus to 20 years together, if you count it, of infinite banking knowledge, the things that we've learned, the people that we've helped with. John, thanks for joining. We've got a lot of people who jump in and out of TikTok.
Love it.
Walcott says, I'm from the UK.
What's up?
What's up? Love it. I don't know. He put a question mark.
Okay.
But that seems
he's not
like
sure if he's from the UK
but that
or
seems
maybe
like a
you
statement.
know something about
What's up,
infinite
Walcott?
banking and you're curious about the
I've been
UK.
to the UK.
Could be
I
either
like
one.
it. What part? It wasn't really a question, so I'm just seeing if he responds. But anyway, I was going to tell you the question. Oh, I already did. I told you the question from yesterday, the credit card question I got, which
I
is
like
pretty
that
good.
one.
I'm trying to think of most recently. I did most recently have someone with a PhD reach out and ask some very, very, very good questions. But
PhD
what they
in
were,
what? Can we know?
oh, I could check the email signature. It was in the email signature, and I didn't pay attention that well.
Just curious.
But asking a lot of questions about dividends. Wanted
Okay.
to know about dividend rate, dividend history, dividend historical rate, and had looked a bunch of things up before our call. Came with very good questions, like 6 or 7 very good questions. Here's what I already found
I
out.
love
Here's
it
what
when
I
people
need to
have
know.
written stuff down.
And
So
you
good.
know what I loved most was like, here's what I already found out. Here's what I need to know. Can you confirm? Can you answer these things? And all the things that they needed answered, I had the information for readily available. And I felt great about it because normally sometimes when they come with a bunch of pre-written, like I need to know questions, sometimes it's like, oh, okay, I can get you that answer. Let me just get back to you. Let me email you in 10 minutes.
Yep. Get you a resource.
But I already had them this time, and I was like, this is gonna be perfect. So I just put in an email reply right there and was like, it's coming to you. You can read all about it. So it's been great.
I love it.
But a lot of dividend questions from that person,
Okay.
actually. Dividend rate, historical rate, stuff like that.
I
Yeah.
love my dividends.
Yeah.
And Yeah, well, we could talk about that. But let's answer J10s and pick at him at the same time. He says last question, but sometimes when people say last question, they don't
They
mean
just mean
it.
last question for this 5 minutes.
Right.
We get it.
What design do you normally recommend? 90-10, 60-40, etc. Thanks.
It's a good question.
You're welcome. All right. So it's a bit technical, and it's not even necessary, but words matter, definitions, classification, etc. Okay. I would swap those 10, 90, 40, 60. And I was talking with somebody, this week who's been in insurance going on 30 years.
It's a
longer
long
than
time.
I have.
That's a long time.
Longer than I have.
Yep.
And they did not know. It's like, how are you getting this early cash value?
Yeah. Traditionally, when people learn about insurance, they don't know how to design policies for infinite banking for early cash value. They do not. That's not something that New York Life's teaching on day one.
Correct.
They just don't know. Yep.
Correct. So I mentioned that to say that, well, okay, this idea of a policy split, 40% to this, 60% to that, et cetera, that kind of stuff, it's all based on the whole life policy. So that's why I'm just being a bit meticulous by saying, well, really, that should be read backwards, okay? Because the riders that we would be typically building on an infinite banking style policy are built on the chassis, the framework, the foundation of whole life insurance.
Yep.
Okay. And then one of the typical riders that we're going to put on that is a paid up additions rider, which allows us to have early cash value. And there could be others, and that's important. That's why we have these one-on-one calls. Okay. But I would say this, that Nelson in his book, and you'll see this in the book, Nelson in his Becoming Your Own Banker book does show illustrations. Okay. And later on, he would even say that he wouldn't have put illustrations because he doesn't want people to get bogged down in the numbers. Okay. The concept is what really matters.
Yep.
But you're going to see that he built robust policies. And what I mean there is he did have a significant enough percentage going to that foundation. I mean, if you're going to build a skyscraper, Jonah, the foundation has to be a certain size.
Foundation matters more than the height. You can go as high as you can. Nothing will fall over in the first
Right. If it's
first
built
windstorm.
sky high with toothpicks,
with no foundation.
it's
Yep.
gonna fall over. So you need to have a robustly enough built policy.
Yeah.
Those are prefacing
I
calls.
like that answer. Here's how I normally answer the question when people ask me about splits and percentages. I normally say this. Jesse, think about your car insurance company for just a moment. I bring this up pretty often. I'm a USAA car insurance member. Who do you use for car insurance?
Progressive.
Progressive. Okay. Do you think that you could call State Farm right now? You do not have State Farm, right? You have
Nope.
Progressive.
Nope.
Okay. Do you think you could call them right now and you could say, will you give me towing coverage? I do not want a policy from you, State Farm. No. I just want towing. Do you think they'd give it to you?
No.
No, right? So here's what I mean by that. What you ask for is an option or a rider, and they're going to say, no, I'm not giving you the option or the rider unless you have the policy first. Yeah. You can have the option and the rider after you have the policy, but not before. Does that make sense?
Yeah.
Okay, so when people talk about what split should you do, what people are not realizing is that the big number, so J10, your big number, your 90 or your 60, and those two different examples, your big number is the rider, okay? The rider, the option. And what you're not realizing is companies are not allowing you to have 90% of your money go to the option and 10% of your money actually go to your policy. They're not actually going to let you do that. That's not enough to your base, like Jesse put it. That's not enough to your base. And so in order to satisfy something that's big as a 90% of my money goes to the rider and only 10% of my money goes to the base, they're going to make you add options onto that policy that bolster your base. And so now you've got money going in that people don't put in the 90 or the 10. They're just going to leave that out.
Mm-hmm.
That have to bolster your base. When at the same time, you could have just changed your split, and then you don't have to have all the other options that bolster your base. And now you don't have inefficient dollars, right? Now you don't have to give up. I've seen it live and in person. $1,000, $2,000, $3,000 a year to bolster my base because I wanted so much to the rider. Just change your split to make it work. That's why, again, we've said it like 10 times, but that's why it's always so important to have the consultation one-on-one, right?
Yes.
So that way we can just walk you through it. So you can go, oh, I think I really want a 90-10, and we can go, well, if you do a 90-10, this happens, but if you do a, 70-30, you don't have to do that. And now look at it. Now look at right? That sort of thing.
Yep.
So we just walk you through it.
Yep.
I love that. Liz, what's up?
What's up, Liz?
What's up? Lee Reynolds, good afternoon, gentlemen. Thank you. Good afternoon to you,
We
Lee.
did get another follow-up question on the UK. I mean, you could practice infinite banking as a concept. We can't work with folks in the UK unless they have citizenship here or some business interest that gets them, an address and a bank account and things necessary for owning, private assets here in the U.S.
Yep. So sorry about that. My good friend who was in the UK, we cannot be super helpful in the UK.
But get a
we
hold of the book.
Absolutely can in the United States or in Canada. And I messed it up again. I was thinking it through. Justin Trudeau or Uncle Joe, we can be helpful to you. So that's how we'll do that. You're welcome, Walcott. Sorry it took a second to come back and get you. Lee, thanks for the love, man. Send some likes.
Appreciate
send some
you.
hearts up. For those of you who are just tuning in or just got here, this is our Ask Us Anything hour. We are currently live on TikTok, where you guys are watching.
Mm-hmm.
We are live on YouTube on the Banking Bros channel. We are live on our Infinite Bankers Facebook page group, and we are live on the Facebook page. So you can connect with us in a bunch of different areas for us to answer your questions. We love answering the questions. Maybe I should just change my bio, right, to I answer questions all day, because that's almost what we do. We just answer questions all day about the infinite banking concept. So we've got just a few minutes left, but if you've got questions about the infinite banking concept, I would love to answer them for you.
Absolutely.
I got two popped in at the exact same time, one from Lee and one from J10. I like them both. I want to answer Lee's because I have a fun thing to say about that one.
All right, go ahead.
Okay.
I'm looking forward to going back to J10 because
Okay.
he did ask another question.
Okay, Lee Reynolds says, what's the difference between a loan and withdrawal? I love this.
Yeah.
Jesse, you got to be my guinea pig, okay?
Okay.
Lee, this is for you. This is
All
for
right,
you.
let's
Okay, Jesse, you're going to go to your bank on the way home.
Mhm.
You're going to deposit $1,000 at the ATM.
Okay.
You're going to come back the next day. You're going to go to the ATM. You're going to stick in your card. You're going to ask for $500.
Okay, I want $500.
Okay,
Yes.
what did you do, a loan or a withdrawal?
I did a withdrawal.
Okay, so now separate scenario. Let's forget the first one.
Okay.
You're going to go to your bank. You're going to deposit $1,000 at the ATM.
Okay.
You're going to come back the next day. You're going to walk inside the bank. You're going to ask for a personal loan of $500.
Okay.
Right? What'd you do? A loan or a withdrawal?
Loan that time.
Which one took money out of your accounts?
The withdrawal.
Which one took money from the coffers of the bank or the institution?
The loan.
Right? Now, both times you drove to the bank to get the money, did you not?
Yes.
So I can see how it can be confusing because both times you drove to the bank to get the money, but one of them came out of your pocket and one of them did not.
Right.
Right? The one that came out of your pocket immediately interrupted your growth, if any, that you were going to get,
Big time.
right? Because you took the money out, it's gone. The one that came out of their pocket did not interrupt your growth, but you may have to pay them back for the money you took.
Mm-hmm.
Now, what if that loan came out of something that you controlled, like a bank account, a private bank that you owned and operated?
But that'd be beautiful,
Well,
Jonah.
because then you don't lose your interest earning. And if it was a loan from me, maybe I could pay it back whenever, or maybe even not worry about paying it back right now, or right? Isn't
Yes,
that
sir.
interesting?
Yes, sir.
All right. That's what infinite
So you're
banking.
saying I could have growth and access?
Wait a
and
minute. Are we
earn
saying you can
and-
save money and spend money at the same time?
Yes,
That's
sir.
exactly what we're saying, Lee. I love that. The good question. Okay, J10 had one more. We're
Yeah,
going to
yeah.
wrap up with this one.
Not my last question.
Do you have multiple policies or is one enough? Jesse?
Yeah. So I started with one policy
Me too.
and I started paying things off and paying for things with my policy.
Me
And
too.
it took me about 6 or 8 months to realize, okay, I can do more of this. I can go faster. I'm keeping more of my money that used to go to these other folks. I need somewhere to put it. So just like banks open up multiple branches, when you begin banking for yourself, you're going to get to a point to where if that branch was successful over there, it makes sense to open up another one. That just means in our world, more policies. So today I own several policies, okay, because I've put more and more of my cash flow into this system of policies. So bank open up multiple branches. We're doing the same thing by getting more policies. One's enough to start.
Yeah, I agree. I've got more than one. I started with one, of course. That's how most people start, with the first one. I currently have 10 personally owned policies. To the person's question who asked it a little bit earlier on YouTube, scroll up if you want to see that. I've insured more than one person in my life. My wife is insured, my kids are insured, because I want that Rockefeller style of family where if someone passes away, the family gets richer. Now, here's the crazy part. I don't really want my family members to pass. I like them. But unfortunately, everybody goes. So if they're going to go, then let's make sure that the family gets money.
Let's be better off.
Right? Then let's be better off. So that's how that works. Jesse, with that being said, I think that's going to wrap up our hour. We are at 12:59.
Appreciate all the return questions.
EST. Lee says he's been working with you.
Oh, you're that Lee. Yeah, of course you have. Yeah. Been a pleasure talking and working with you too, sir. We've got a phone call scheduled here soon, if I'm not mistaken. Or I'm waiting for you to get back with me. That's what it is. Yeah, we had a good call the other day.
Text him back, Lee. We're ready to help you out. No, take your time, but we'll help. We'll help. Anyway, with that being said, we thank you so much for joining us here on TikTok, on YouTube, on Facebook. We're going to do this again next week, same time, same channels, to answer all your questions. Leave comments on the videos. Leave comments on the reels. Leave comments on the shorts. We'll go through them. We'll scroll through them. We'll scrub them. We'll make sure you get your questions answered. Thanks so much for joining us, and we'll see you next time.
Y'all take care.